All right, January 28th, 2021. All right, so I'm just going to do a very quick review of today. I had a really good trading day today, and yeah, I had a really good trading day. I didn't really trade most of today. I was busy taking care of my daughter. Fridays, Mondays, Wednesdays, and Fridays are not days I do very well trading because I have to do that. However, I did get some time in the afternoon to trade this portion. I traded this afternoon at lunchtime a bit over here, made some money and lost some money, but that's usually because I'm not focused, concentrated properly. Anyway, got some trades here and yeah, made bank here. This actually was very very interesting. So this was one of those ones where I think I mentioned yesterday how when you're trend trading, it's always good to sort of use a moving average. As you know, I generally tend to have the chart without the extended hours. I only do the extended hours for the recap. So as you can see, that was yesterday. Anyway, so today, um, so what we had here, and it's funny because when I look back at the other charts, I remember looking at this on my phone. I was like, I'm sure I have a demand zone over here, and I explain why I'm saying this over here because of the fact that this is all green, but I don't normally trade it and didn't actually chart anymore. Because and the reason why I don't like trading supply and demand again and just purely on price action is because of what's happening here. It's easy to just kind of get out your trade over here or even over here because you're seeing these red lines. And I quite frankly don't want to have them there. All right, so this is what happened now. Um, bar by bar, bear breakout, massive bear bar, um, sort of from yesterday's range, kind of at the top of the range over here. We kind of sold off, tested the bottom of this range, and then what you have here is another big, massive bear bar. And you have to remember these these bars are huge. Um, this is 33 points. That's usually a range for an entire day. I remember back about a few months ago, that was literally the high and the low of the day. And this is just the beginning of the day. Anyway, so this is very convincing to make you think that this is going to be the next leg from this, right? When actually you're in a trading range. I remember the rules of trading ranges, or rather, trading ranges tend to um, create traps. So as you can see, prices come over here, and you have two legs up, and then you have a top, which is probably will form a wedge. So over here you have 1, 2, 3, tends to form a reversal, two legs down, and then we don't have a wedge here yet though, but you know what I mean. It's like this is the bottom of the range, and generally ranges tend to have traps, bear traps here, bull traps at the top. All right, so this was a trap. And the reason why I say it was a trap is because this bar is so big. The second bar is really big. This bar closed on its low but did not break this low. It's easy for you to say, okay, I'm going short at the because this is a breakout. So if I go short here, I should expect a bear trend. But then you get a wick at the bottom. It's very disappointing, right? Traders now see this bar. So whoever went short here is disappointed with this bar, possibly this bar, but definitely this bar. So then I'll put a limit order over here or here to get out, which is why, I mean, some of them sold some more over here, which is what caused this wick over here, and then obviously got out here, right? Because of how disappointing this is. That formed a double bottom, which is obviously a good sign for the bulls that this price is very important. They can't seem to go past this price. Very, very okay signal bar. A lot of them went long here. Some were very eager, went long over here. You have a nice breakout bar, 3 bull bars. Big bull surprise. You should expect a second leg up. Here we have a double top. In fact, let me just mark that. Duplicate. But it's a lower high double top. Right? And I'm going to make that red. And here we go. Let's make that red. Just signify double top. Okay, so lower high double top. So obviously traders who sold here will probably sell again. And you have another bar here, another bar here. In fact, there's actually a wedge over here if you think about it. 1, pull back 2, pull back 3. So I will start, actually 1, pull back 2. So pull back 3. So this is the wedge, right? And I remember looking at the price action. I'm sure if I go to a lower time frame, it will probably be a lot clearer. On a 2-minute, there we go. 1, pull back 2, pull back 3. All right, so that's the wedge. go back. And where are we? Where's today's price action? Okay, here we go. So that's a wedge. Lots of buys in this area, as you can see. This is obviously the area where lots of buys have been. And then you now have 4 bull bars, always in long at this point. A nice retracement down, test of a moving average. Does not actually test this low, so you kind of form a little bit of a triangle. But you can also call this a wedge. I think I'll mark this as a wedge. Again, on lower time frame, this is probably a wedge. But because it's bull bars, I don't normally do that, so I'm just going to take it off. It's not the way I would trade it. Anyway, so you now have this, another wedge bottom over here. I'll actually mark his wedge from here. 1, pull back, 2, pull back, 3. I actually did it from here, 1, 2, 3. Reasonable to go long here actually, but then because this is already a big massive bull bar, second leg up, could be a bull trap. Better to just wait for another bull close above it here. Even though it's at the top of the range, I'm never ever happy about that. I mean, and then again, we still have this level, but I'm almost convinced that these are buyers. I would probably just take this long, but with a very small stop, a very wide stop. I'm sorry, not wide stop, very small position. All right, so first leg up, second, actually, now this is another thing. This is a pause. However, one would probably say this is part of a wedge. Spike and channel, 1, 2, 3, or 1, 2, 3 if you want to, and say this is the first pullback and the bottom of the first range, right? Another spike, 1, pullback, 2. I actually tagged it this way because I feel this is a pause and this is the first pullback. So 1, pullback, 2, pullback, 3. Right, so it's a spike, pullback, and channel, 1, 2, 3, and then you now have the retracement, obviously too far from the moving average, test of the moving average, 1, pullback, 2, pullback, 3, wedge bottom, goodbye, test of, which is exactly what you expect. The first retracement always, usually in a wedge, is usually tests the bottom of the first pullback, which is why I don't call this a pullback. However, this actually did come here to test this. So for a bigger wedge, this is a pullback, maybe on a higher time frame or a lower time frame. So you now have a double top here. Reduplicate. Major trend reversal, maybe, one would argue. I wouldn't. It would be a higher low major trend reversal, but I'll call it a minor reversal in his recap. Anyway, so this could also be a wedge fill, and this is why I had a measured move up. I can't remember why I did that. Maybe that's why. Anyway, we now have another smaller range here, as I said over here. Bear breakout, test it, and so therefore when you have a bear breakout, you want to aim for a measured move the size of this part, and then hopefully this part. But we only made this one. Bear breakout, found some buyers again over here. Obviously, buyers love this price at the top of this range. And I'm trying to see what Al had on his video. In fact, you know what? I'm just gonna, not his video, but his own recap. This is Al's own recap. He has sell to close here. I actually just looked at this just now just to get a good sense of his own thing. He has a wedge top here. Did I put a wedge top on mine? I did. Anyways, and he has a wedge bottom. You see, this is the thing. Al does some things sometimes where I'm just wondering, where did you find this wedge? Oh no, he has a wedge there. I never see these things. But anyway, missed this, so I didn't even trade this. As you can see, 3 legs down, or 2 legs down, 1 pullback, 2. And then you could go long above this bar, and you'd have been filled over here, stop over here, which is actually really, really good, as you can see. This is where things got really interesting. So you have 1 pullback, 2 pullback, 3. Right, so spike and channel. I actually went short over here. Actually entered eagerly here with half my position. Put my stop just a bit higher up here, and then entered the second position when we broke this candle, and got out. When I saw we tapped this, I got out just above. I had a feeling, very, very, very strong feeling that we were going higher. And then now looking at it in hindsight, it makes sense because we had this big leg here, and if you think about it, this was a measured move up, so here to this high. Let's actually take that, activate. So this measured move from here to here took you to the top, right? So it was exactly about the same height. 1, 2. All right. I didn't even think about the fact that we had that was a potential measured move, but I had a feeling, and I'm going to use the word feeling in a trade here. We're going higher. The only reason why is because I'm looking at the overall structure of the way we've traded over the last few days. We have a bear spike, and then a bull flag or a bear flag, right? One pullback, two, and then maybe the next high. That's what I'm thinking. So you're going to get three highs. So this would be a wedge top, one, two, and then one more top at this moving average over here. So therefore, if that's going to happen, then we need another rally. So therefore, this wedge was going to fail. And therefore, it made sense for me to get out over here and then buy the breakout in this direction, which is exactly what happened. So this failed over here, the moving average. Bulls bought this over here, and this kind of wicked up and then became a bull bar, broke the highs. I bought the close of this bar, had a measured move target to here, possibly could have moved my target a bit higher, and I got out just below the target. I actually was scaling out as we're going in, made a really good profit today on that. And yeah, then I now notice we started going higher, and this is where this started to mess up with my mind, only because I had these red lines. I considered just, not even taking the trade. I just thought, you know what, you've made so much money today, you don't want to give anything back. Eventually, it became a measured move to this high based on this breakout, or possibly this breakout. And then you can see there was a retracement over there. Measured moves tend to form resistance, and of course that price is also resistance on this level. And obviously it's also where this is sold off from, so it makes a lot of sense that we would have measured moves there. Yeah, so it's so funny how measured moves are just so accurate. And someone asked me, why is that? And I said, it's actually logic. Think about it. If, say, you sold this breakout here and you put your stop over here, which is exactly where I mean, if I sold this breakout, I'll probably put my stop at the beginning of the breakout. But a lot of traders will put their stop over here only because they know this is a range that if there's a fake out over here, they can sell some more over here and get, come back over here and make money and come out break even. But then, therefore, if your stop is here, you want to go for 1-to-1. So therefore, your 1-to-1 target is going to be over here. So it makes sense that all the people who sold over here, which is why this bar is so big, have exited around here, which is why you have all these wicks and all that kind of stuff. So generally, measured moves tend to cause that. Think about it. I did the same thing over here. Over here, I know I said if this wedge fails, I am going to take a trade from here all the way up here. I'm going to put my stop over there. And that's exactly what happened. But in this case, that actually went a lot higher than my measured move target. And that's actually because of this breakout. This candle broke out of this entire range here. And of course, traders are going for a measured move up there. All right, so yeah, so that's my training recap for today. Again, I don't know if I'm going to trade on Monday because Monday is a day that I am going to be babysitting my daughter, and therefore, yeah, I'm not sure. Oh, another thing I noticed, we have a wedge here. 1, 2, and 3. But then again, I may be wrong. It could also just be 1, 2, 3. So 3 ranges, 1, 2, 3, and therefore a good, nice rally. But again, it is just a trading range. This could be a bull trap. And the way we will know if it is a bull trap is if this sell-off on Monday does not break the moving average. If we have a gap down, therefore a bull trap, where if we stay at this level, i.e. we open on Sunday, come back to this level, and we stay here, and then on Monday we come back down and test the moving average. If we don't bounce off the moving average and cut out, then this was a bull trap. All right. We'll start again next week.